Hello, everyone. Happy Sunday. Welcome back. Good afternoon. Let me get audio check here on my end. Hello, everyone. Happy Sunday. Welcome back. Alrighty, we're good to go. Amy, good afternoon to you. Williams, afternoon to you, sir. Momentum, hello, my man. Huge congrats on that 5K payout. A long time coming, but you've been putting in the work, and we knew what the end result would be as long as you kept showing up every day, putting in that work, man. Huge congrats to you. Momentum, don't want to say your name here on YouTube, but huge congrats to you, my man. You've been putting in the work. You absolutely deserve it. And it just goes to show trading is not just a dream. It's something that you can absolutely make a reality if you do the right things. Huge congrats to my man, Momentum. Eslam, welcome back, Dylan. Yes, sir. Glad to be here. Joe, hello. Momentum, thank you, sir. My absolute pleasure. Thank you, man. Make it all my time, everything I'm putting into it, worth it. And now you have a skill set for life. Happy for you, brother. Benson, Sundays are for Adora Trading, no doubt. Yes, sir. Dedicated, locked, and loaded. Let's get it. All right, guys. So let's get into what we're looking at here for today. Has been a tough AM session the past couple weeks from what I've been seeing. Very profitable month for us at Adora Trading, for my trading live every single day. And of course, if I wasn't making money consistently, a lot of the folks in the audience that are with me live every day would be saying I'm lying straight through my teeth. So money's being made consistently. I know that has not been the case for many because price action has been very difficult. So I do want to let you guys know that that is reasonable. Traders that I know that have been successful for even months and years are going through rough patches right now with how the morning session has been delivering, and it has not been easy. One of the things I was actually mentioning on one of the streams, one of the live coaching sessions from the past week was, if I was a developing trader in these market conditions, it would be a bloodbath. Because when I was developing, I didn't have a trading plan, I didn't have discipline, risk management, and it was just me being impulsive. And in these conditions, if I didn't have the skill set, the discipline, the trading plan, all the things that I implement now, it would not be pretty. So saying that to say, it's so important for you guys to have your risk management, have a trading plan, because if you're blowing accounts, going into deep drawdown, even in difficult market conditions, there's no excuse for that, right? You can lose trades, right? You can go into drawdown, but it should always be controlled, calculated, and easy to come back from. If we're going into severe drawdown, then that is a great opportunity to look at the weaknesses rather in your trading plan and improve those going forward. So with that in mind, guys, let's go ahead and get into it here. Just want to share that. I know it's been a difficult one, so I want to give you guys some words of encouragement. Markets will not stay difficult forever, but if you are having a difficult period right now, use this opportunity, press into it, see what you need to improve. Maybe it's the risk management, maybe it's controlling your trade frequency, maybe it's being less impulsive. Those are all things I needed to work on to get to the consistency that I'm at now. So saying that to say, guys, AM session has not been easy. They're not changing the algorithm. They didn't patch the morning session for trading, right? It's still doing the same things. We're still making money week after week. Nothing's changing. It's just market conditions have been more difficult, more high resistance liquidity run, a lot more uncertainty, consolidation market profiles. So not been easy morning session trading. So if that's been the case for you, understand that it's completely normal. But again, use that opportunity to take what you can from it. So let's go and get into the US dollar here, weekly chart. We were watching this weekly inversion fair value gap here last week, and I wanted to see, could we use it as support and trade away from it? But instead, when we drop down into our daily chart, I said that I wanted to see the body stay in the upper half. On Tuesday, we immediately closed below that weekly inversion fair value gap. If you guys are not in the free Discord, and by the way, this is the public chat, so this is free analysis. As you guys know, the market is a living, breathing organism, so things do change in the market. So what I give you guys on Sunday may not be how we finish the week. So we started with a bullish bias because I wanted to see if the market could find support inside that inversion fair value gap. Instead, the algorithm signaled that it's bearish. How to do that? It closed below that weekly gap. So that immediately allowed me to take everyone's attention to sell side here and here to get in sync with what the market was actually showing us, right? So again, as we cover, right or wrong doesn't make any money. It's about, can you identify where the market's going and capitalize on opportunities? So initially coming with the bullish bias, the market just absolutely melted through the weekly inversion fair value gap. That's fine. That's giving us new insight. We pivot in the correct direction and we allow the market to show us what it's going to do. So going back to that weekly chart here, really nice displacement away from that inversion fair value gap. So my attention goes to 50% of the wick as the first target. And then through that, we have the sell side back here. Daily chart, as we covered, so market closed below that weekly inversion fair value gap. That signaled weakness. And then you can see we also closed below this daily gap here as well. trading up into that, respecting that, selling off, and running for the sell side liquidity that we were able to pivot to once the market signaled it wasn't bullish. So going forward, we have sell side here, 50% of that weekly wick, and then through that we have the sell side at the 97s, right? So order flow still remains bearish based off everything we're seeing here going forward. Hourly chart. Let's go up to a 4-hour, and let me take this off. 4-hour chart, looking for the market to complete this market maker sell model here. So original consolidation, market broke down, and then now look at the details. This is why the lower time frames are really helpful, only if you know what you're looking for. So look at this weekly fair value gap with the quadrants on the 4-hour chart. So what did we do right at Monday or Sunday's open going into Monday? We just immediately sunk to the low end of that gap. We traded up into the lower quadrant here, and that fair value gap respected it, broke down, hit the low, respected it, broke down. So absolutely nothing bullish off the open, right? I mean, we opened, dropped, disrespected all the key levels that we wanted to see. And then going into the hourly chart, if you guys will recall, I said the key level I'd be watching on the hourly chart would be this hourly gap here. And for us to remain bullish, it should find support here. But the market did the opposite. Traded below it, used it as resistance, very easy read. And then you can see the market's going to attack the sell side based off that information. And then from there, we opened, respected lower quadrant, broke down, respected the lower end, and then just absolutely cratering into the sell side liquidity here. And then looking for this here on Sunday. We also have sell side back here, so that's something to keep in mind if we continue to accelerate. That's the business for dollar. Going into the bond market. Let's go to the weekly chart. So you've been seeing lower prices on treasuries. No surprise to us. Been covering the market structure. Long-term high up here. Market breaking down. And then the past 3-4 weeks, you've just been seeing continuous downward expansion. Working down into the daily here. Here we go. The draw was this sell side here. We fell just short of it. But again, the market's still gravitating to that level here again based off the market structure. Intermediate term high, long-term high. Market breaking down. So again, if you have market structure aligned with what you're looking for, it's going to give you those protracted price swings that you want to see when it's in the underlying market structure. So saying that to say, the sell side here, as long as we remain below this bearish breaker, again, we touched on this last week. So this last down close inside this swing here, extend that through. That's going to be your bearish breaker. As long as you respect that, my attention is on sell side here, and then all the way down here, down into these relatively equal lows. Not a lot of confidence in the bond market right now. There was actually a bond auction and nobody bought. So what does that mean? The Federal Reserve is going to have to come in here and buy all the treasuries. So what does that mean for inflation? It's going much, much higher. So on the back of that, we're going to see lower bonds. So let me just cover that. Lower bonds, sell side here, and these relatively equal lows. On the back of that, there's a lot of distrust in the U.S. financial system. So what does that equate to for the gold market? So I know I'm already going to ask to look at gold, so let's go ahead and just sort that out right now. Gold, if you guys remember, I was calling gold higher for you guys from this bullish breaker block here. Why is that a bullish breaker? Well, because it's a low with a lower low. Highest up close candle inside that range, extend that through, bang, market's ripping higher. Also, it's a dealing range. So from this low to this high, we have equilibrium here. So the market drops out into a discount market for smart money market maker buying to occur. Inside the bullish breaker, below equilibrium, and we're back off to the races, and we're back above 3,300 an ounce. So they gave a really nice discount market below 3,200 for more smart money accumulation, and this thing's going to keep on ripping. There's a lot of lack of confidence in the financial system, not only in the United States. If you look at what happened in the Japanese bond market as well, right? So chickens coming home to roost in the fiat financial system. That's all I'm going to say here. And gold's going to keep on ripping on the back of that. So keep that in mind. We are looking for higher prices on gold. And if you see, all we did is retrace on the weekly into this down close order block, which on the lower time frame will be a bullish breaker. And then through here, we have the buy side here and here. And that's what I'm looking for on gold. Really like to see this here, how we traded away from this breaker with a fair value gap. And then we traded into that gap and left the lower portion open. Exactly what you want to see. Gold's going to keep on ripping. So again, as I've been telling you guys for the past several months. For those of you guys that are trading gold, keep trusting buy models, right? When we're at all-time highs, sure, there's going to be retracements, right? It makes sense for the market to retrace to a short-term discount if you know how to read price action in market structure. However, for the most part, you want to stay focused on buy models because, again, when the market's at all-time highs, calling a top is a loser's game. Calling a top in a long-term bull market is 100% a loser's game. So that's not something you want to focus on. Trade the underlying order flow, stay in line with that. It's going to make your life much easier as a trader. So gold, I'm seeing an intermediate term low here priced in. And again, I like the buy side here for gold. And then for silver, I usually get asked about silver. Let me pull up silver. Silver is still inside this little nasty consolidation here. Watch this fair value gap. If gold trades higher, then silver will likely move higher with it in sympathy. So if we can find support inside this fair value gap here, then we have buy side here, and then buy side, back here as well. So if we remain bullish from that gap, then those levels have my attention. And since gold is likely going to be bullish, then that will pull silver up with it as well. Man, silver at 33 an ounce. Remember when I was buying that stuff back here in the 20s. So in case you guys didn't know, I am a bull on precious metals, especially long-term. Not as a trader, but as a long-term investment. I think it's a no-brainer. If you understand that fiat just goes down in value, why wouldn't you want to hold things that are priced in dollars, right? Alrighty, bonds, covered that. Let's go back to dollar, and then we'll go into the NASDAQ. All right, so weekly chart for NASDAQ. We had a down close candle last week, but I'll go into also what I was doing intraday and how each day intraday actually delivered buy setup. So every single trade I took this week was going long. Made money going long on Monday, made money going long on Wednesday, and made money going long on Thursday. But we had a down close week. How does that work? I'll show you what it looks like intraday and how I was able to navigate that. But it was a down close candle. Weekly fair value gap, we traded up into that, and then we see a retracement, which is reasonable, right? If we look, I mean, 1, 2, 3, 4, I mean, really 4 consecutive just up close candles. The market absolutely ripping. A little bit of a pause here, but still market's pretty overextended when it runs vertical like that. So a retracement isn't out of this world, and that's, I believe, what we're seeing here. So what I'm watching going forward for S&P and NASDAQ, S&P, it's going to be this weekly inversion gap here. You'll notice the bodies just closed on that. So I want to see the body stay above that. So on the daily chart, as you'll see, we closed right on that inversion fair value gap. I want to see it stay above that. So if we can stay above that inversion fair value gap, my bias remains bullish for indices. Again, I'm not trying to call a top in the market. If it does top out here, that's fine. It'll show us and we'll get in line with that. But as of right now, as long as we're above that inversion fair value gap on S&P, my bias is bullish. And that was also, again, shared in the Discord as well. Because as things were changing, the market was dropping. I was like, okay, well, what levels am I looking at? Let me share that with the group as I'm doing my evening analysis. Usually every evening, I usually do my review analysis ahead of the new day, and I'll share my thoughts in the Discord as well. So with that being said, weekly fair value gap, watching that for us to remain bullish. Little weekly fair value gap here below us. So it can drop into that, but we wouldn't want to see it close that in all the way and work down into that gap here. I feel like we've already made a nice run away from that. So for it to come all the way back down to this level here, I feel like that'd be a bit too much of a drop based off the market structure that we're looking at here. So daily chart, we have a short-term retracement into this gap here. I personally wanted to see the market work higher from this gap here. I like how we hit it on Monday, made the low of the day inside that midpoint, and I wanted to see the market take off from there. Market had other plans, ended up breaking down and trading deeper into this inefficiency here, and then stabbing down into this gap here. Hitting it, finding some support. So like I said, we'll have to see how we trade there going forward. But last line in the sand is going to be this weekly inversion fair value gap. All right, daily chart. First time looking at the charts this weekend. So daily fair value gap here, how we trade there is going to be influential. And then now let's refine this down to the lower time frames here. So they did leave these equal highs here. Again, I don't believe that's a topping formation. However, this daily fair value gap here, which is this range here. Let me show you on the daily chart. This daily fair value gap here is going to be key for me. So this gap here, we're going to look at this on the hourly chart now. And you can see we displaced down through it on Friday. I was not trading on Friday after getting paid on this beautiful run higher on Monday, after getting paid on this beautiful run higher on Wednesday, and then this beautiful run higher on Thursday. No need to trade and really worry about Monday's or Friday's price action at all. So didn't do anything on Friday, but now just looking at it in terms of framing the game plan for the new week. We energetically traded away from that daily fair value gap, and now we're coming back into it. So what I'm going to be watching going forward here, changing the color there, will this act as an inversion fair value gap? Meaning, do we retrace up into it like we're doing now and then continue selling off? If we do that, that is not bullish at all. And especially if we stay in the lower half and can't explore the upper half and we start to rotate lower, then that is absolutely not going to be strong for NASDAQ. So watch this daily fair value gap. The weekly and the daily is still bullish, right? So I'm not trying to call a top again, but I just want to give you guys what I'm weighing out so that if I do see that the market is potentially topping out here, what factors am I going to use to come to that conclusion? Watch this hourly fair value gap here. So I'm not going to keep it on here just to keep it clean, but this hourly fair value gap is going to be crucial going forward. If we do what we're doing now, respecting this gap, working lower, that would be bearish. If we get above it, support inside this gap, trade higher. Now it may seem, Dylan, that's a 50-50 analysis. You're calling both sides of the market, man. Now think about how rarely I ever do that. It's just because right now, think of where we're at. We've already called thousands of points higher in the NASDAQ. We've seen a monster run all the way down here from this breakaway gap that we're calling real time, ripping. So with that in mind, we've already seen a strong move higher into a premium. So if it is going to reverse from a premium of this range, that wouldn't be out of this world. So saying that to say, we've already seen a huge move in this direction. And if you guys recall, we were talking about last week, for swing trading, it's not a good idea that long swing trades in a premium, right? You have to get long down here and predict that price run. So saying that to say, that's why I feel like we're at a critical point right now. And I'm going to be watching that daily fair value gap to come to my conclusion as to whether or not we have topped out or if we're going to see continuation with higher prices. Gun to my head, giving you guys one side of the market. I do favor these equal highs here. I don't believe this is a top. I think the market's going to want to trade up into that. However, fair value gap here, traded into, respected, broke down, fair value gap, traded up into, starting to respect it. So we are starting to get initial clues that order flow may be shifting bearish. So all eyes are going to be on this daily fair value gap here and how we trade at this level. Below it, we're bearish. Getting above it, that shows strength, and we'll resume the march higher towards all-time highs. So that's the business for NASDAQ. Let me go to S&P. And then, yeah, same thing here for the S&P, that weekly fair value gap here, extend that through, and we're going to be watching that like a hawk here on the lower time frames. Want to see how we trade there. Same thing for NASDAQ, same thing for the S&P. If we work lower from that weekly fair value gap and stay in lower half, that would be bearish. However, for us to remain bullish, I would need to see us get above this hourly fair value gap here. So getting above this gap here, using it to support higher, then that takes us back into higher prices. So really at a point where I'm waiting for more information, but I want you guys to know exactly what I'm using to base my decisions off of. And then as we move forward throughout the week, I will keep you guys updated as the market gives new information. So with that, short and sweet, it is a holiday weekend. So with that in mind, looking at Monday, it is going to be a bank holiday. So Monday probably, well, definitely not doing anything on Monday. Tuesday morning probably won't be active either as well, because it's the day after a bank holiday. And just like we saw that the day before, a bank holiday is pretty trash, right? Like look at Friday's price action, right? I'm sure nobody sees this and says, "Wow, I wish I would risk my money in this," right? So the day before, bank holiday is usually pretty garbage. Also, if there's no high impact news. So this day was just a double whammy. The day before bank holiday and no high impact news, it's going to be an absolute slaughterhouse for the gamblers. Tuesday, day after bank holiday, will also likely be difficult as well. So with that in mind, I'm probably going to be focusing my attention on Wednesday, Thursday, and Friday, maybe Tuesday PM session. It'll depend, but that's probably going to be my schedule next week based off the economic calendar. Much more detail on that in our weekly newsletter, which again is out every single week, written by my top analyst, Tommy, and something that you always want to be mindful of when we're framing opportunities, when we're looking to trade, when we're not looking to trade, all those details covered in great detail. Because again, it's not just about the patterns. It's not just about knowing your fair value gap, your order blocks, your breakers, whatever model you're using. It's also about knowing when it's going to be high versus low probability, right? Because it doesn't matter what pattern you're using in this type of price action here. I don't care if you're using inversion fair value gaps, breakers, order blocks. If you don't know how to manage a difficult consolidation market, you're likely to get smoked with whatever you trade. So it's very important to understand these details here. And these are big components as to why myself and my team have longevity in the markets. So with that being said, guys, any questions for me before we get going? James, I'm down 5%. James, I know as much as 5% drawdown may be uncomfortable. 5% is easy to come back from. The good thing is you didn't turn it into 8%, 10%, 15% drawdown, because now that is a level of drawdown that takes time to come back from. From my experience, James, the only thing I have to be mindful of as a trader is not going on tilt. If I can prevent myself from going on tilt, money's being made month after month after month after month. So once I learned that, that became my number one focus, because the trading is easy. You show up, you execute on the models, and you manage risk, and you stay in control of yourself. The only thing we have to be careful of as traders is not going on tilt. And if you can manage a loss, keep it small, it's easy to come back from when market conditions are easy. But the worst thing we can do is keep pushing, and then put ourselves into 5%, 8%, 10%, 15, 20% drawdown that then takes weeks and months to come back from, or just blow the entire account, which is obviously a possibility as well. So that's all avoidable. Keep it a small loss. It's easy to fix with the skill set that you're building. Kevin, good afternoon. Dylan, happy Memorial Day weekend. To you as well, Kevin. To you as well, sir. Alessandro, good afternoon. Monday is a bank holiday. You going to trade Tuesday AM, or will you be waiting for the PM? May not do anything on Tuesday. With what I'm doing with my trading, Alessandro, I don't need a lot of trades to do a lot. So everything I'm doing is more centered around quality over quantity, because I can show up and make a killing in a little bit of time. So I don't need to trade every single day, every single session, or feel like I'm missing out on something, because when you scale your trading to a point to where a couple trades can produce a lot for you, it shifts your mindset. And now it's not like, oh my God, well, I need to be there on Tuesday. I have to be there. It's more so, I want to be there when it's the cleanest. That's going to be Wednesday, Thursday, Friday. And that's all I'm looking to do. Trade easy price runs, manage risk really well, count money at the end of the year. It's a simple life, but it took me a long time to get here. Islam, why do you consider the weekly fair value gap, not the monthly on ES? Islam, that's a good question. There is no right or wrong. One of the things that I frequently talk about in live coaching sessions and between my team is myself and Tommy, our analysis is lockstep 98% of the time. So 98% of the time, we're looking at the same targets, the same drawn liquidity, the same narrative, and it makes sense. Obviously, he's trained with me for over 3 years, so that goes without being said. But what you'd be surprised about is that we actually use different levels, right? Sometimes I'm using an hourly or a 15-minute bullish breaker, and he's using a 4-hour order block. Who's right? Who's wrong, right? Maybe you're using a monthly fair value gap, and I'm using a weekly fair value gap. But are we still going to reach the same conclusion? And the answer is yes. So it's not to say that just because I'm not looking at the monthly fair value gap, it's not important. But it's a matter of what are you seeing, right? And as long as you know how to use these levels, you know how to read market structure, price action, order flow, then it really doesn't matter what level you're using. They're all going to work very well for you. So just wanted to add that, because again, when I'm doing this analysis, I'm just looking at the levels that are pertinent to me. But that doesn't mean just because I'm not looking at it, it's not important, because there's tons of levels on the chart that if I talk to you about every single level I'm looking at, there would be 100 lines on the charts, 50 rectangles, and it would just be pure confusion if I pulled out every single level that was available. So what I'm doing with my experience is filtering the ones I think are going to be the most salient. And if there's some outside of that that I may not be referencing, that does not mean they're not important. Amy, a quick question. If you haven't already, can you provide the outlook for gold, silver? Many thanks. Absolutely, Amy. Already covered that right after the US dollar. I already knew that question was coming, so I got ahead of it. Same thing we covered last week. Bullish breaker is going to find support, and since then we've been ripping. So you're very welcome for that one as well. And we're going to keep ripping going into the new week off that bullish breaker. So trust you guys were able to sort out gold and silver based off what we shared last week, and it's on the same trajectory. So nothing's changed there, but that analysis was covered right after the portion with the US dollar. Oil, that's one I need to look at. Yeah, let me go take a look at oil. Let's go to the daily chart. All right, so daily chart for oil. Oil is really interesting right now. A lot of saber rattling going on. If you look at Iran and Israel, right, threatening each other. So that's why we saw, when was it? Let me go to electronic trading. We just saw this wild spike here on this Tuesday. That's because I guess threats were being made between Israel and Iran. So they just literally repriced oil almost $2 a barrel higher on that news. But since then, they've sent it lower. So gold, it really, or sorry, not gold, oil, it really looks like they're holding it here in a range, right? And the reason it's being held is because of all the uncertainty as to, are bombs going to start flying around the Middle East, right? And those are things that would absolutely send gold, oil and gold to the moon. Saying that to say, I feel like the market is being held waiting for one of those events to happen. Hopefully they don't. Of course, that's nothing that we're wishing for. Saying that to say, though, oil is being met with a lot of uncertainty. Uncertainty meaning what's going to go on geopolitically, right? Is China going to do anything to Taiwan? Is anything going to go off in the Middle East, right? There's so many things being thrown at these markets right now that there's so much uncertainty. If one of those things do pop off, we will see silver, or sorry, keep saying silver, oil will continue absolutely ripping. But as of right now, I just feel like all that uncertainty is causing oil to be held in a really tight range. So I don't have a lot for oil right now. If, like I said, if I call markets that are really sloppy all the time, then it just wouldn't be the precision you guys are used to. So again, I call markets that are really easy to see. Like for example, something like gold, right? Easy to see the dealing range low, dealing range high, retracement to equilibrium, bullish breaker. It's really easy read because the market structure is fluid, and I just don't have that right now. And crude oil looks pretty sloppy, equal highs, equal lows, banging around inside the range, so not a lot of clarity. But I believe on the geopolitical front, those are the factors that I believe are influencing the price action in crude oil. So a lot going on in the world right now, a lot to keep up with. Awesome. All right, guys. Don't see any more questions. Hope this one was insightful. I will see you guys on the next one. Take care.